Good weekend, all. Ira Epstein, and here we are on Saturday, and this is the 10th of December, 2022, and we're getting ready for a pretty active week. I think we are. Why? We have the FOMC meeting on Wednesday. On Tuesday, we have the CPI numbers. You got to be watching those. My interpretation of last week was at best you got to wobble in a combination of a tad higher unemployment claims on a weekly basis. I do like that the continuing are jumping much more. That's very encouraging that people that are losing jobs aren't getting their new job 1, 2, 3. That's what continuing represents. But I wasn't impressed that the PPI is breaking down. It's wobbling. If that was your big break, uh-oh. And what does that maybe mean? Well, when you look at the CPI, I think you have to interpret it as possibly meaning that it too may wobble. Now, I think you're going to get a difference in the CPI in two different areas that I'm going to be looking for. Because energy prices have crashed, I think the headline CPI will be down nicely. I don't know that the core will, because all the other items that make that up have to wait and see. Then we get to whatever the Fed's going to do and the pressure on them. Do they go 50 basis points, which is what the analyst surveys are all showing? Or are these numbers enough to scare some of the hawks in there and say, what do we have to lose by another 75? And then we start coming down. I think that'll be the argument behind the doors. That, of course, all changes. If on Tuesday's CPI you just see a crash in the numbers, including the core, then it's a 50 basis point and it's a no-brainer whatsoever. Now, you get the yin-yang impact. Remember, you get the statement at 1 o'clock Chicago time, 2 o'clock Eastern. What time is that in Europe? Asia's sound asleep. We get that, then we get the press conference 30 minutes later that begins. So if that ends about 2:30 Chicago time, 3:30 Eastern time, again, Europe's closed. You go into Asia, as they awaken, they'll decide what happens. It goes back across the world to Europe, they'll decide. It comes back to us Thursday morning, and sometimes you get what's called the yin-yang. We go one way, and then we see the next morning it goes the other. Just be ready for anything. The markets still have normal volume. They should all week long. Normal being for this time of year, the holiday volume hasn't kicked in. People aren't going yet away for Christmas. And that's very, very important. However, by Wednesday of the week after, the game starts changing. People on the 22nd, 23rd, they're already leaving for families and whatever's going to happen in their minds on something else. When we go to the gold market, this is very important. It's taken the market an awful long time, but it has successfully, let's get to where the lows were months, right here. That is the low month, October. So from October, November, whoops, I did that wrong, November into December, we finally got back to the 18-month moving average. So in terms of where you're at in relation, that's pretty darn neutral. And if anything, you give it a nod to the bull side. Why? Because at 1798.10, you're over the 18-month moving average. So that's a shift of events. What's the big upside target? Clearly, these highs back into this area. When you look at the weekly chart, even just looking at a close only, that's bullish. When you come to the daily, visually that's bullish, and the swing lines are up. Higher lows, higher highs. Okay, where's the resistance? You're right here at the 200-week moving average of closes, with the support being the combination of the 18-week in red and in gray the 200-week, and the Bollinger Band at 1824.60s, your next resistance. So you're in a huge resistance area. And my question is, are you going to put yourself at risk going into the CPI and the FOMC? I think the professional money won't. I think they'll be grabbing money off the table, not turning bearish, grabbing money. I don't know that they'll take their whole position. Grabbing money doesn't mean that. In terms of momentum, you're not embedded, but you are at the point where I don't think you attract new money to buy, because you got readings that aren't embedded and they're over the 70 level. In the gold-silver ratio, silver is stronger than gold. You can see it. The smaller these numbers go, in a perfect world, and you got your shopping cart, you fill it up with silver bars that you've been buying at different prices. You fill it up, and at the end, next to your Publix, your Jewel, your Kroger, whatever the heck's in your area for food, you're taking it, and there's that coin dealer that's the greatest guy in the world. He doesn't charge a commission, and he just goes by the prices of the futures. Well, you used to have 90 ounces. Now you need 76.4 to get an ounce of gold. So silver is stronger than gold right now. When you look at where you're at the combination of the 200-day average, the upper Bollinger Band, and not embedded. I think the professional money this week said, cut positions down. You'll say, it's going to keep going, and I'm saying the exact opposite. Learn to work with Bollinger Bands, and you start getting an understanding why. Am I saying be bearish? No, that is not what I'm saying. Cut long positions down. You're not as bullish, okay? You're looking for corrections. In the copper market, you tell me you're not building something here. You're going just plain sideways. This is the churn. It has the bullish bias, but like silver, you're in an area where the readings are rich. We'll call them that in the momentum, and you're at the upper Bollinger Band. If it wants to pop higher, the next resistance is 414. I've gone on record that I think copper, and it won't be this, it'll be on the weekly chart. I think it's $4.5, $5 market sometime, could be late 2023. I want to see the recession we're supposed to get and the impact. I'm more enamored now that that China is really taking its COVID rules down, throwing money in addition at the economy for property. A lot of traders will think that, come next year, we could see by the end of the year, maybe they're talking 5% growth in that. Well, that's going to be very good for the copper market. What I don't like is if you're watching currently, everything there, their exports, their imports are all down sharply because of COVID. When you look at the platinum market, you're fighting your big battle between the 100-week and the upper band. Again, you've already come up so much, you're too rich in momentum for me to get involved for clients off a weekly chart there. And maybe in the dollar index, you go to the lower Bollinger Band. I turned bearish in the dollar back here, as you know, and I was ahead of the group. And the guys that are still bullish, I don't believe that they understand what's going on fundamentally or in the chart action. They're both in the bear camp. Are you vulnerable for the CPI FOMC this week? You are. And then you got the European Central Bank, and I think the Bank of England. You got a lot of central banks coming at you right away. So you want to pay attention, but we, the United States, our CPI and our FOMC meeting on Wednesday, they're the elephant.